Hello and welcome to Down South Finance. In today's video, we'll be talking about the Roth IRA and what qualifies you to use this investment vehicle. As you can see from the photo, one can become a millionaire by investing in a Roth IRA, but more on that later. If you're new to this channel, thanks for joining. If you would like to keep seeing content about personal finance, please hit the subscribe button below. But without further ado, let's roll the intro. Today's video is going to go over opening a Roth IRA in 2023 and the benefits of opening a Roth IRA in 2023. It's tax and free income in retirement because you can supply the Roth IRA with money that has already been taxed. There are limits to this. Single or married is $6,500 you can contribute a year, and then you have a catch-up year when you're 50 plus, which you can put an extra $1,000 in there, which is $7,500. You can start withdrawing from Roth IRA at 59.5 without any penalties. Single modified adjusted gross income of less than 138K. You can contribute to this if you're single, and then it starts to phase out up until 153K. After 153K, you can no longer invest into a Roth IRA. Then for married, it's 218K. Then slowly starts to phase out and completely phases out at 228K. Definition MAGI. AGI's adjusted gross income can reduce the amount of your taxable income by subtracting certain deductions from your gross income. Is your AGI after factoring in tax deductions and tax-exempt interest. You can find your MAGI in your tax return, although your AGI appears on line 11 on Form 1040s. Examples of deductions are your HSAs and your traditional 401ks. Another example is if you only make $6,500 a year or $3K, for example, all you can contribute is that amount you make into that Roth IRA. So if you make $3,000 in a year, you can only contribute $3,000 to your Roth IRA. Here's an example of being a tax-free millionaire. It may take 28 to 29 years, but assume you contribute $6,500 for 28 years. That equals $182,000. With a 10% return on average per year, your account will be over $1 million. All dividends and gross will be tax-free in this account as well. Now, just to go over what I invest in, you can see these items here. I'll show you real quick. VTI, VOO, VYM, and BND, which is a bond. So there's 4 ETFs I invest into Vanguard. It's VTI, VOO, VYM, and then BND. With Vanguard, you don't have fractional shares, so anything left over of the $6,500 that gets contributed into that Roth IRA for that year goes into BND. But the 3 main ones are VTI, VOO, VYM. VTI is a total stock market ETF index, large blend. You can see expense ratio is 0.03%. Domestic stocks, inception date was 2001. See, performance returns is 7.67%. Price currently $192, roughly $193. Portfolio compensation, you can see there are 3,969 stocks in this. Market cap, 117.7 billion. So quite a lot. Basic materials, you can see the makeup here. Top holdings, Apple, Microsoft, Amazon, Google, Berkshire. That's for VTI, for the total stock market. We can then go to VOO. Is the S&P 500, large blend, 0.03% expense ratio. All these get dividends as well. Inception date was 2010. Minimum investment, that's one thing I like about ETF indexes. It's not like an index fund, you had to invest $3,000, you only had to invest. Year to date, since inception, 13.07%. S&P 500. Price 355 roughly. 507 stocks, 160.2 billion. Here's all the sectors it's invested in. Top holdings, pretty similar to VTI. Then we go to VYM, which is a dividend. Dividends don't get taxed in a Roth IRA, which is why I like this one. 0.06%, a little higher in expense ratio. Index fund, domestic stock, general large value. 2006 was when it opened up. 8.04% return. Price, roughly $103. Portfolio composition, 441 stocks in this ETF. See how it's broken down from basic materials all the way to utilities, consumer staples, finances, and then healthcare being the highest. Then you get Exxon, J&J, JP Morgan, Chevron, Procter & Gamble, Home Depot, and Merck, and so forth. And for the last one, with any money left over, to keep blended, balance it out, is BND, which is a Vanguard Total Bond Market ETF. Not as risky. To expense ratio 0.03%. 2007 was it created, this ETF/index. 2.83% since 07. Obviously, the returns aren't as good because it's a bond. See the portfolio makeup here. Number of bonds, 10K plus. Maturity, duration, 8.9 and 6.6 years. And what type of bonds? U.S. government, AAA, AA, A, BBB. Majority being U.S. government. And here's all the holdings as well here. So yeah, this is what I invest in. If you guys have any questions or concerns or anything, please comment down below. Thank you for tuning into the channel. If you're new to the channel, please hit the subscribe button. And yeah, thanks again for everything. I'll see you guys in the next video. If you stayed until the end of the video, thanks for watching. Please like this video and comment if you have any questions. And if you couldn't tell, our dogs Yuma and Cooper would love for you to subscribe to the channel. Thanks.